Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Thursday, the 20th of August, 2026, and markets are reversing some of the big moves that we saw yesterday. In today's video, I'll break down everything that you need to know ahead of today's U.S. session. Let's get right into it. So the biggest news comes from the world's biggest market, the U.S. Treasury market. Of course, we saw yields fall sharply as U.S. Treasury Secretary Bessent announced a plan to increase buybacks in the secondary market that was seen as sort of a modified version of Operation Twist for those of you who remember that. But in essence, what it is a temporary measure to try to drive down longer term interest rates, which have clearly reached a level where the government is starting to get worried. However, as we come into today, markets are coming around to the fact that it is just a short-term fix, and we've now seen the longer-term U.S. Treasury yields entirely reverse yesterday's losses. This is a sign of concern about the long-term sustainability of the U.S. economy, and as a result, we see, of course, bonds falling, yields rising. We see indices on the back foot. Oil separately is rising 3%, increasing future inflationary pressures, and the US dollar is flat. More on that momentarily. We did have some economic data this morning. First, U.S. jobless claims came in roughly as expected, maybe a tick better than expected at 206,000 for the most recent week. That brings the 4-week moving average to 204,000. Still a relatively low number historically and indicating a generally strong U.S. labor market. However, U.S. consumers may be just tightening their purse strings a bit. We saw that with earnings from Walmart, the largest retailer in the U.S. outside of Amazon this morning. Walmart is falling 6% ahead of the U.S. Open after some of the lowest same-store sales that we've seen in quite some time. Nonetheless, the U.S. consumer is still generally fairly strong, but it's the derivative, that change in spending that, while same store sales at Walmart are still growing, they're growing at a slower rate, and that has some investors concerned. Today's chart of the day, I had to layer in the U.S. Treasury yields here so we can see that move more clearly here on the 10-year basis. And I've also highlighted a chart here of gold. And if you look at most of this hourly chart, so just going back the last couple of weeks here, we can see a positive correlation between U.S. Treasury yields and gold. That makes sense. As yields are rising, there's concern about inflation. Gold is generally seen as an inflation hedge. However, with that announcement about 24 hours ago, we've seen that relationship invert, and essentially when we saw yields fall, that led to a rise in gold, perhaps signaling some concern on the part of investors about the U.S. Economy and debt levels. And now that we've seen yields sort of reverse some of their previous losses and now trading higher than they were 24 hours ago, we can see gold prices coming down. So it'll be interesting to continue to watch this relationship as a barometer of the market's confidence in the U.S. debt market. As for specific levels to watch in gold, I'd be viewing this as more range-bound, especially if yields continue to rise. Key levels to watch to the top side in gold are 45.25. That was the high that we saw yesterday. And above that, 4,570 or so is the 38.2% retracement of the drop off the record highs. Meanwhile, to the downside, there's not a lot of support. Maybe that previous resistance area in the 44.50 area, and below that, the lows that we saw earlier this month, closer to 43.20, could come into play. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I could ask just one quick favor though, before you go, please do drop a like on this video. It's a free way to show your support that helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com for more videos like this. Thanks again, and best of luck with your trading today.